Hello everybody and welcome back to GMD Investments. The great Warren Buffett now holds 222 million Oxy shares, worth around 13 billion, or a 24.9% stake in the company. Occidental Petroleum is an international energy company with assets primarily in the United States, the Middle East, and North Africa. The company operates through three segments: oil and gas, chemical, and midstream and marketing. The oil and gas segment explores for, develops, and produces oil, which includes condensate, natural gas liquids, and natural gas. The chemical segment primarily manufactures and markets basic chemicals and vinyls. Lastly, the midstream and marketing segment purchases, markets, gathers, processes, transports and stores oil, NGL, natural gas, carbon dioxide, and power. Midstream and marketing segment also includes Occidental's low carbon venture businesses, OLCV. OLCV develops carbon capture, utilization and storage projects, including the commercialization of DAC technology, and invests in other low carbon technologies intended to reduce GHG emissions from its operations, and partners with other industries to help reduce their emissions. Roughly 70% of Oxy's revenue comes from the oil and gas segment, and it's highly dependent on oil prices. OPEC, which includes members from Saudi Arabia and Russia, the world's biggest exporters, deepened oil supply cuts in an effort to send prices higher, yet the move only briefly lifted the markets. Both cuts came into addition to take total output reductions to over 5 million barrels per day, or about 5% of global oil output. One main reason they done this was a concern about weak demand from China due to concerns of its economic recovery from coronavirus lockdowns losing steam. Also due to the impact of the Federal Reserve raising interest rates to fight stubbornly high inflation. Higher interest rates eat into consumers' disposable income and could translate into less spending on driving and travelling, limiting oil demand. JP Morgan cuts its oil price forecast for this year and 2024 as it sees global supply growth offsetting a record rise in demand, while inventory build-up lowers the risk of oil price spikes. The Wall Street Bank revised its average Brent price forecast for 2023 to $81 per barrel from $90 earlier, and also lowered its 2024 price forecast for Brent to $83 per barrel from $98. So why is Warren Buffett investing so heavily into a company that is highly dependent on oil prices, and the prices are slowly decreasing, and a company that announced earnings where profits dropped 83% and is expected to have further earnings declines in the future? Occidental is a classic Berkshire stock. They generate a lot of free cash flow, pay good dividends, and are buying back stock. Currently also has a PE ratio of 10.82. Buffett also admires the company's CEO, Vicky Hollab. Also, even after the significant move higher, Occidental shares are trading at a very low multiple of free cash flow. Occidental made a massive purchase used by the investment from Berkshire to buy Anadarko Petroleum back in 2019, which gave it the number one position in the high-producing Permian Basin in Texas, along with a leading position in the DJ and Uinta basins in Colorado. Indeed, 80% of Occidental's production now occurs in the US, and I'm now going to preview a short clip of Mr. Buffett himself talking through the deal made with Occidental.
Last Friday, less than a week ago, last Friday, I got a call in the middle of the afternoon from Brian Moynihan, the CEO of Bank of America, and he said that they were involved in financing the Occidental deal, and that the Occidental people would like to talk to me. And I said, fine, I can talk to them anytime. And I think he emailed later on and said this, that Vicky Hollab, CEO, was traveling and that she'd call me the following morning. So she called me about 9 o'clock on Saturday, and I said I'd meet with her anytime, and on Saturday or Sunday. So we scheduled a meeting for 10 o'clock on Sunday morning, and she and Oscar Brown came, arrived at 10 o'clock, and by 11 o'clock we had a deal. And they had us committed unequivocally, come hell or high water, for $10 billion. And if the deal is made with Anadarko. So they had to get their own board approval, but they walked away with it. 9/11 happened or anything like that, they had $10 billion for the deal.
Did you do this because you're betting on the oil industry or the Permian Basin or on oil prices, or is this just the terms of the deal itself?
Well, the oil prices are the big determinant over time, obviously. If you're in oil, same thing is true if you're in copper for copper price. So oil prices are enormously important, but I was familiar with Occidental and generally familiar with the Permian Basin, although I've never been there. If I were there, I wouldn't know what to do. But no, it was a sensible deal for us, a sensible deal for them.
Really, as shown, the main reasons why Buffett owns Oxy is because it fits all of his criteria as we talked about. Strong dividends, stock buybacks, lots of free cash flow generated from the Permian Basin, and also the fact that they are reducing their debt is something Buffett always looks for in a company. All in all, it's the perfect Berkshire stock.
We like Occidental's position in the Permian, and we wouldn't like that position. Well, it got to minus one day. It got to minus $30 a barrel. That was crazy, of course. But if oil sells it at X, you do very well, and if it sells at half of X, your costs are the same, and it doesn't change the production, and it doesn't work as well. But it also brings down the oil production of the United States very fast. So we don't know what oil prices will be, but we do very much like the Occidental position they have, and that's why we finance them.
One of Buffett's criteria as well is good management, with good past performance, and Vicky Holub meets these requirements as shown.
Vicky Holub she's an extraordinary manager of Occidental. Her first job was with City Service. That was the first stock I bought in 1942. She knows what happens beneath the surface. I know the math of it, but I wouldn't have the faintest idea what to do if I was in an oil field.
As we can see, Oxy's intrinsic value, which basically means an estimated actual value of the business when compared to the current market price of $64, and actually the energy sector seems rather undervalued across the board. So maybe Mr. Buffett views this stock as little risk due to the fact there's not a lot of room to the downside. This analysis comes from a discounted cash flow model that I will go into more depth into a separate video going forward. I'd like to thank everyone for watching this video, and if you enjoyed the video, subscribe for more content going forward and to stay up to date with market news, investing ideas and the like. It's been a pleasure. Until next time.